Hello and welcome back to the channel. So in today's video, I am going to be talking you through an ETF that I am adding on a monthly basis to my self-invested personal pension portfolio. So I am dollar cost averaging this ETF into my portfolio, or pound cost averaging, as obviously we are in the UK. So I'm buying the same amount every month of this ETF. And I wanted to talk you through the reasons why I'm choosing to invest in this ETF over and above the S&P 500. So in my opinion, for me, this is a favourable ETF because the performance is better, and there's a few other factors that come into play that I'm going to talk through in this video, but I wanted to share it with you because I thought you might find it interesting. So in this video, we are going to be talking through the phenomenal performance of this ETF, which is obviously one of the main reasons why I decided to take a closer look at it, and then also what makes it different from the S&P 500. So for example, what makes it different from Vanguard's VUSA. We're going to talk through fees, and then also we're going to talk through risk level, because that is so important to consider when you are choosing an investment. So first of all, what is this investment? It is the iShares SUUS. That is the code for it, and its full name, which I'm not going to repeat again in this video because it's so long, is the iShares MSCI USA SRI UCITS ETF. So a long old name there, but I'm going to refer to it as SUUS or SUUS within the rest of this video. So this is the investment that I'm going to talk to you about today. It is an ETF. If you're watching this video, you probably already know what an ETF is, but just in case you don't, an ETF stands for an exchange traded fund, and an ETF holds onto a certain number of different companies within it. So when you buy that ETF, you are buying several different companies rather than having to buy individual stocks and shares. So for example, Vanguard's VUSA or VUSA ETF holds 500 different companies within that single ETF. So when you're purchasing that ETF, you are buying a little slice of 500 different companies. Let's get into the performance of SUUS, because I think it's phenomenal and I have been very happy with its performance so far within my portfolio. So 5-year annualized returns for SUUS are 14.49%. So that means on average over the last 5 years, it has achieved 14.49% every year on average. And if we compare that to Vanguard's VUSA, which is the S&P 500 ETF, that's had a 5-year annualized performance of 12.89%. So SUUS was established back in 2016, whereas Vanguard's VUSA was established in 2012. So it's been established for 4 years longer. So if you're looking for an ETF that has a little bit more history, then Vanguard's VUSA is 4 years older. However, obviously the S&P 500 has a much longer history than that. So it dates back even further than that and was established in 1923, where the index covered just 233 companies, and then it was introduced in its current form in 1957. So that's when it expanded to those top 500 companies. So if you're looking for a really well-established index, then potentially you might be more interested in Vanguard's VUSA or the S&P 500, because it does have those years worth of historical data. Now, what I will say is obviously historical performance is not always indicative of future performance. You know that, but if you're a person that likes to have a long look back into history, then the S&P 500 does have that benefit of having years of history. Okay, so what really is the big difference between these two ETFs? So as we said, the performance for the SUUS ETF is higher at 14.49%, but I wanted to dig down into what the main difference between the two of them is, and really it comes down to the way that they are screened. So the iShares ETF gives you access to the US market, but it is screened. The companies are actually screened for ESG. So ESG stands for environmental, social and governance. So this basically means that it screens out more controversial companies involved in industries like, say for example, weapons or tobacco, firearms, alcohol, gambling, that kind of thing. And then also the companies have enhanced environmental credentials as well. So this ETF is further screened for things like thermal coal, oil sands and oil and gas companies. So that is how this ETF is screened, and for me personally, this was something that I felt drawn to and wanted to invest in. I personally like that it is screened for those ESG factors and those environmental factors. Okay, so once that screening is complete, this portfolio for SUUS is left with a total of 167 companies at present. So that is versus the S&P 500 or Vanguard's VUSA, where there's obviously 500 companies. Actually, at present, I think there's 506 companies within Vanguard's VUSA, but you get the picture. You are left with only 167 companies in SUUS because of those environmental and social and governance screenings. So the top 5 holdings that you're left with in SUUS are Tesla, Microsoft, the Home Depot, Adobe, and Coca-Cola. And that obviously does differ from the top 5 holdings that you're going to get in the S&P 500. So in the S&P 500, the top 5 holdings are Microsoft, Apple, Amazon, Nvidia, and Alphabet. So if you're looking for an ETF that has a greater number of holdings within it, then the S&P 500 definitely wins out because you've got over 500 different holdings. But if you're looking for a portfolio or an ETF that is potentially screened for ESG and you're comfortable with having fewer holdings within an ETF or index fund, then potentially SUUS would be worth looking at for you. So as I said, they have just 167 holdings at present within that ETF. Okay, moving on now to 2 really important factors. They are a little bit boring in comparison to performance and screenings and things like that, but we are going to talk about fees. Really, really important. So the fees for iShares SUUS are 0.2%. So that is higher than the fees, for example, Vanguard's VUSA, which are 0.07%. Now, for me personally, I am happy to pay slightly more in fees because of that additional performance and because of the screening that is done to the SUUS ETF. However, fees are so important. They really do compound over time. So if you're looking for access to the US market, you're interested in a really low cost ETF, then potentially Vanguard's VUSA is for you with a fee of just 0.07%. Moving on to risk now. Now this is one that often comes up when I'm talking to my friends about investing, and they're always like, I am not interested in investing. I don't want to lose my money. Too risky. So let's talk about risk in this video. In terms of the synthetic risk and reward indicator, this indicator goes from 1 all the way to 7. So 1 as a rating is the lowest level of risk, but potentially lower levels of reward. And then all the way up to 7, which is the highest level of risk and potentially higher levels of reward. Both ETFs are at a risk level of 6. So both on the higher end of risk and potentially the higher end of reward as well. So digging down a little bit further, we're going to look at standard deviation. So that's a really good way of getting an idea of volatility within an investment. The lower the standard deviation, the better, basically. So looking at 5-year standard deviation for SUUS, it's 14.22, whereas Vanguard's VUSA is 13.78. So quite close in terms of standard deviation, but obviously VUSA is winning out here in terms of having that lower standard deviation. So the lower the standard deviation, the better if all else is the same. So in terms of risk level, the VUSA ETF is definitely favourable with that lower standard deviation. So that just means that Vanguard's VUSA is potentially more of a predictable ETF in terms of performance. But as I said, they're not too different, and when they're weighted up on the synthetic risk and reward indicator, they're actually given the same level of risk at level 6. So yes, all really important things to consider, but I just wanted to give you an idea of the investments that I'm adding at the moment to my investment portfolio. As I said, I'm dollar cost averaging SUUS into my self-invested personal pension at the moment. So every month investing, whether it's high or whether it's low, I am simply buying that investment on a monthly basis. Now, what I will say is my pension at the moment, I would like to be contributing much more to it, but with the cost of living, it's not easy, is it? So yeah, in time, I would like to be investing more on a monthly basis. But at the moment, as long as I'm keeping that habit for myself and I'm investing monthly, I'm really happy that I'm doing that. So potentially, I'd like to be investing more, but wouldn't we all, really? Anyway, thank you so much for taking the time to watch this video. If you have any questions, please do pop them in the comments down below. Any ideas for new videos? I am finally trying to get better at making regular videos. So this is me hopefully saying that there will be a new video video every single Wednesday. If you fancy subscribing to this channel, I would really appreciate it. And thank you so much for taking the time to get to the end of this video. And I wish you all the very best with your investments. Bye bye.